Let's do this. Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? Good? You doing good? Welcome to our show. We call it Closing Beat. We are financial advisors here at Jazz Wealth. Hope you check us out at jazzwealth.com. Marketing. We'll see you Thursday for Wine and Wealth. Eric did our notes from Jazz this weekend. And hope you enjoy. We're just sort of weird financial advisors that like to focus on every little thing. I thought about doing a video about like what an advisor should do so that you guys could see like, is that something you want to do or is it worthwhile for you to explore? Because a lot of people think advisors are just focused on investments, and I think the good ones are, but the even better ones want to focus on everything, and they just sort of always throw stuff out there and see if they can get your attention, and that's really what we're trying to do here. We are a small company, getting bigger by the moment, but we don't have ambitions of being some big unicorn or whatever the word is they use these days. And so with that in mind, this show is always that close to not happening. Like, it's like, oh, we're not going to do it. Today was a good example. We tried to get fancy with all of this stuff earlier today. And would you say it backfired? Yeah. It pretty much backfired. So we'll fix it. We'll keep working. On the bright side, we're trying something different to see if maybe the audio stays the same as we work through the different pages there. So if it works, let us know. Anyways, below on the right-hand side of your page, you can see our FinTips videos this week. We do free videos every day. They're on YouTube. We only ask for a subscription, which is free. You can just hit the button there if you would. And we're going into a bunch of different stuff now that we have Eric along. Eric is a great financial planner. And so we want to get you guys exposed to some different things that maybe I don't often talk about. So if you have anything you'd like us to talk about or any sort of detailed planning-related info, tips, tricks, tax tricks, investment tricks, and all that, we don't mind sharing them with you. Just one of those things. The more we teach you, the more you'll keep us in mind, and maybe the more we'll see you come join us at Jazz. So hope you'll check it out. All goodwill type marketing here instead of the, buying put your name on the side of a stadium or buying a Super Bowl commercial. That would be funny though. Imagine a commercial, a Super Bowl commercial. Hey, I'm Dustin. Like, I wouldn't know what to do. Anyways, look at the market. So we got a little bit of a rally here today. This market has something for everybody. That's the good news, right? So it's really appealing for both the bears and the bulls. Simple as that, right? If I can make this work, yeah, it's going to work. Here's the S&P. I mean, just for the past week and a half, we've just sloshed around like jello on a plate. That's the title that I gave today here. And jello is not a bad thing, right? Everybody loves jello. So it's just the fact that it's not doing anything. You can't have the jello. It's not trying to scare you. It's not doing anything. It's just sloshing around on the plate, teasing you. And so for the bears and the bulls, it's a good thing. Why? If you think about it, we had a big downturn here and a massive rally. And the bears that refuse to believe that the market is going to recover and do all of this great stuff, they think that this pause is a good thing, meaning there's no more buyers. Right? If the market was bouncing so far, so fast, all in 1 week, then the bears look at it and they say, no more buyers, this thing's going lower. All right, we can't argue that, right? The bulls can't argue that. Now, the bulls look at that and they say, okay, cool. We had a big, strong, sharp rally. We put our stamp on the downtrend to let people know that this was the end of the downtrend. And the fact that we're not selling and not selling off means there's no more sellers. Right? So think about that. Both sides actually at the moment are going, wow, there's nothing in either direction to say that you're in trouble. It's kind of a tough one. What does that mean? That means you do nothing, right? If you're an investor, a long-term trader, whatever it is that you're doing, there is zero need to make a major decision right here. And that's half the battle. If you can tell yourself, do I need to sit on my hands or do I need to go shopping? Right? It's not time to go shopping. It's time to do your homework. Like I mentioned yesterday, find what you're interested in. And if the market happens to fall or go higher, what is it that you will do there? Last week, I also gave you some good news. I keep telling clients, they want to put a lot of money into the market. They're all excited. Things are cheaper, and they want to do this. I've created a bunch of animals here because I've shown every data point that shows when the market falls to varying level of degrees, it obviously means, long-term opportunity. And so these animals out there, our clients here at Jazz, they're like, I want to put money in. And I said, well, hold on a second. I mean, as happy as I am as an advisor to get you to put more money in, the honest answer is there's no good reason for the market to go back to highs. Give me something. Why should we go back up to here other than the stat over the last 35 years that says anytime the market falls 20%, the average time that it takes to get back to all-time highs is 9 months? Other than that, give me a reason why we should go higher. And, nobody has a reason. I gave you a little one last week that said, forward estimates for earnings by the consensus of all analysts out there still shows an increase in earnings. It's not amazing, but we're seeing earnings growth going into the third quarter of 2023. All right, that's not all that exciting. It doesn't normally move markets. So this week I've got another one for you. It's a small little thing. Maybe it doesn't mean much to you, but it's one of those little things that adds your check marks in the bull column there. It's really small, but I'll share it. Here we go. So these are the automobile imports from Mexico, right? So really, we're just looking over here. Imports from Mexico are increasing. Why in the world does it matter if we're importing cars from Mexico? Well, in the United States, we make just over 50% of all cars here in the United States that are sold in the United States. I should say it that way. And we get 20%. That's the second largest country, Mexico. 20% plus come from Mexico. Well, we've had some issues, right? We've had supply chain issues. We've had semiconductor issues. We've had total production issues out there. And so this suggests, without looking at anything else, that the semiconductor issues may be starting to taper off. Because if we're importing those cars are complete, which means they have hopefully most of the products, unless it's a Ford and they've just decided to ship the cars without the product. But so anyways, we're showing that maybe semiconductors are starting to look a little bit better here. If we look at production here in the US, we're also seeing an increase. Now that data is a little bit more forward leaning because we get the data sooner, but we're also moving in the right direction. Not without a fair amount of fits and starts along the way, but we're moving in the right direction to suggest that maybe that semiconductor issue is not a big deal. I could also take it a little bit further and I could go, hey, China semiconductor sales. They did pull back a little bit, but now the most latest data shows they're starting to tick up again, meaning they have the chips, they have the actual finished product to sell, and they are in fact selling them there. So it's minor, right? That is not something you would bet the farm on, but you go, all right, we've got analysts bullish about the future in terms of earnings. We've got auto production starting to come back a little bit, auto imports coming back a little bit, semiconductor sales coming back a little bit. Okay. That's a couple things, right? It's not totally bearish. I could at least throw a few things into that column there. So the moral of the story is we've got a handful of things that are not your lead. We want to see, obviously, housing take off. You want to see great production, sharp increase in GDP. There's much more important economic indicators that would move the market higher. But if you're scratching for something, that's all I got. Right? At least I got something for you there. Anyways, looking at the S&P here today, moving on. I've had a couple different points of rambling this week. By the way, let me bounce back. I'm going a little off topic, if you noticed over the last couple of days, just picking on something and talking about it. Yesterday, we talked about the probabilities of a Fed fund rate hike and how that's decided. We did some strategy sessions last week to talk about how you could look at the markets differently. Today, obviously, talking about Mexican imports. And that's because the market is slow, right? It's chopping around. Look at what happened today. In fact, I'm going to go over to the SPY so you can see the intraday performance only. The volatility in over here, the volatility happens in the morning. The sharp pullback, the sharp rally, and then it's just steady as she goes. A little bit of volatility in there, but that's what we've seen the last couple days, and I've been pointing out that the market's in that summertime mood. Well, when that happens, I don't want to just not talk about anything. I want to keep teaching. So we're going to use that as just throwing different things out there that I look at, maybe I take for granted, that you could look at as well. All right, if we look around here, we've got Apple. I'm going to talk about Apple in a second because they've got their developer conference going on. They were higher here today, which is really odd for them. Microsoft also up 1.4%. Those two lead the way. Apple is the biggest weighted stock on the S&P 500. Also, your semiconductors are starting to respond back to what we just showed you there, possible increase in sales. You got Broadcom higher on the day. NVIDIA slightly higher. Not too big of a deal there. Texas Instruments was one of the bigger movers, 1.25%. That's a tough one to play along with. But all in all, the semiconductors industry was a little bit higher on the day by about 1% overall. Weakness came from Amazon in terms of the bigger stocks that were weaker on the day. Walmart was another one, thanks to Target with their news that came out. I'll cover that in a little bit. Some of the retailers, which are going through their earnings season. TJ Maxx still selling off from that. Home Depot weak. It's trying to find its reason to bounce. And then, you probably know, but ExxonMobil, that was one of our bigger performers in our portfolios here at Jazz today. It's just a 4.5% day. It's not just ExxonMobil either. You got Chevron out there, every single thing in the energy space. Look at the XLE, just to look at the different sectors there. XLE, 3% on the day. You name it, it was higher. ConocoPhillips, these are starting to really pull away. This is that last second buying from the excited retail trader. I don't want to say the novice or the rookie because we all have access to the same information, but this is that last second buying. Notice, we're just trending along. Everybody's happy to enjoy the ride. Now we have chasing. You can see chasing on a chart. Chasing leads to pullback, so it's very difficult to buy in this area. I would maintain it's very difficult to buy. Looking around, you got the NASDAQ up a little bit here today. Same thing, jello on a plate. I'd say the Dow's got the same thing, jello on a plate there. The Russell 2000 finally back above or almost back above the 50-day moving average. Haven't seen that in a little bit. So small caps, while everything else is chopping around, small caps managed to sneak a little rally in there. Gold higher by 0.6%, and interest rates are starting to behave in the same. They're starting to correlate themselves like they normally do with the market. In other words, prices of bonds go up with the market. Prices of bonds go down with the market. We have seen a disconnect there. Well, over the last couple days, the market has responded to the movements in interest rates. That could be because there's nothing else going on, or it could be that interest rates are starting to move back into their normal free market type, marketplace without the Fed as much. I don't know. I don't follow it that much, but it's something to point out. Okay. The developer conference. You want to learn something? I'll teach you something here. So the developer conference has been going on for at Apple since really 1987. It wasn't until about 2002. I remember this because I was fresh out of high school. 2002, Apple said, we have so much attention on this developer conference. Let's use it for product announcements. And that was genius on their part there. They talked mainly about software because at that point they were moving into software and hardware was pretty much a stable, developed sector for them. Now, I point this out because it is something that market participants follow. Remember, I just said that a minute ago. Apple is the largest stock in the S&P. S&P is a market cap weighted index, meaning the more valuable you are as a company, the more participation you get in the S&P. So Apple is currently just over 7%, 7.5%, somewhere in there. Someone can maybe help me out with that. But last time I checked, it was around 7.5% there. So the Worldwide Developer Conference, WWDC as they refer to it, can actually be a stock market mover, right? Because if Apple has a big return in response to whatever they're doing there, it can actually move the market. Now, what's interesting is if we look at Apple here, there we go. So if you look at Apple, this is only the third time that Apple has been down going into the developer conference. If we look back 1 month and we just said, look at the month before every single developer conference, historically, it's higher for that month. Returns are positive going into the developer conference. See, there's a thing with Apple that's called buy the rumor, sell the news, and it applies to Apple so perfectly. Apple goes up into the developer conference, sells off during the developer conference, and then starts to go up after that there. I'll show you, actually. We have a fancy chart. give you a little something here. So this is during the developer conference, right? Don't let it scare you. Down here, we got the years. We have the performance during the conference from start to finish there. And we've got the average. So basically, 2007, down 1 month before the conference, 3.21%. 2008, well, that was a bad year for everybody there, but down 7%. 2009, 5%, and so on and so on and so on. Only recently have we seen that it's been up a little bit going in during the conference there. But during the conference, what we're showing here, I think I just said a month before, during the conference, pressure to the downside. The average loss, 1.38%, almost never positive during the conference. We pointed out a few big ones here. The time that it was up the most, they announced the iPad OS, Mac OS was part of their production there. And in 2008, the iPhone 3G came out, which was largely sold into the news there. Remember, because that got leaked. So we all knew what it was ahead of time. So there was nothing to do during the conference there. That's happened quite a few times. It's actually happened almost every time, but that's a side topic there. Anyways, so during the conference, Apple's only positive 33% of the time. So if you said, I know this conference is coming up and they're going to announce a new operating system, the thing they talked about, Apple buy now, pay later, oh, it's going to be amazing. You would technically you'd statistically be wrong. It wouldn't be a wise bet to make. Now, where would you benefit the most? Let's say you had to buy the Apple conference before, after, slightly before. What would be the most optimum way to play it? And this is going to be a different chart than we're used to sharing here. So it may not be the best way to show it, but we took a shot. So here is the performance on top a week later. Average performance a week after the developer conference is about 0.5%. A month after, 3.7, and so on, right? So you say, all right, as long as I buy after the conference, long-term returns just get better and better. That's this historical performance. But look at the bottom. It is up 0.5% about half of the time. Are you going to risk it? Do you want to make 0.5% and have a 50% chance of being successful? Probably not. You'd probably sit that one out, right? Now, if the odds were or historical odds were that it was up 90% of the time by 0.5% a week after, maybe you take your chances. But 50-50, right? Not so good. Look what happens here. There's a bend to the odds of it being positive. I'm not saying this happens again. I just think it's fun to look at. So as you go a month later, 73% chance of being positive, all the returns average positive. 3 months later, 86%, and then it gets a little shaky again. So historically, if you were going to participate, you would say, I should buy after 1 week following the developer conference, and my holding period would be about 3 months. Right? Give or take a little time right in there. It's not that this is bad. It just means that that's the optimum way to look at it. Now, that's kind of silly, but imagine doing this with a portfolio with 100 stocks. This is what fund managers do. They go, what's the optimum time to hold on to this position? Because of how it affects the volatility, how it affects our total returns, how it affects the dividend yield, things like that, right? I'm just doing it with one stock. Rather interesting. I thought I'd share that with you. If it's not interesting, I'll move on. But this summer, if you're interested, I'll keep doing things like this to share different ways of looking at it. I'm not saying it's right. I'm not saying it's the best way to do it. It's just kind of cool to follow a known event that happens every year, and investors treat it the same way almost every single time. Rather fascinating. All right, other than that, rather fascinating. Bitcoin sold off quite sharply overnight and then spent the day recovering. The catch there is, well, first of all, if you own Bitcoin, I don't want to hear it about the stock market volatility. That's pretty interesting volatility. And if you can weather that with more money than you have invested than you probably should in crypto, then I don't want to hear how you're worried about the stock market, right? Don't deal with the volatility over there, then give me a hard time for what volatility is crushing over here in the stock market. But anyways, the argument right now in Congress is, who's going to really regulate the varying types of avenues that you can go down with crypto, whether it's the stable I'm thinking mutual fund land, whether it's the stable coins, whether it's going to be Bitcoin itself, whether it's going to be these different hybrids that you can go down where you're essentially replicating a commodity using crypto. And so they're determining who's going to regulate them and start that process, right? So there's a lot of different rules coming up there, and nobody likes regulation. A stock would move the same way. So there's nothing wrong with Bitcoin. I'm not a fan myself, but there's nothing wrong with it being wild today. no stock would handle that well. And I would argue it did pretty good relative to what was going on. Oh, all right. Anyways, let's move on because I talk a lot. 13 new highs, but it's basically the same thing today. You want to see the same thing? You got the same thing. Talked about WRB yesterday. It's an insurer looking like it was going to move to new highs again, and it did. Prudential, I'm sorry, I put the wrong one on there. I'm going down to the new lows, or the energy stocks, because every other name on the list was basically energy. Marathon Petroleum. Told you yesterday, it's hard to fight those, but boy, that's getting extended. That is one where you're looking the other way now. PSX, Phillips 66, one of their ticker symbols here, new highs. I mean, it's the same thing, right? Every day. I mean, it's sad to say, because that means we're all going to be paying $6, $7, $8, whatever dollars a gallon for gas. But they're doing well, right? So Valero doing well, hitting new highs. New lows today. Really not interesting because they all reversed and finished positive on the day. Stocks in the news. I'm coming for you. Don't worry. Stocks in the news. You got Target. I'm sure you read the stuff. CNBC probably covered it. You know what's going on here. Target. What I can add to this is that Target had their second profit warning in less than 2 weeks, 3 weeks, something like that. They're guiding for about a 2% margin now due to unusually high transportation costs, which the transportation costs are unusual, but it's not like a surprise to any of us. I don't know why the stock initially sold off that much on that news there. The trouble is the government's focused on, let's cancel student loans. That's what we should do right now. It's only and by the way, that's taxable, right? So everybody that's like, cancel the loan, 10,000 is not enough, 50,000 is what we need. That's taxable. So you're asking for a higher tax bill. So they leave that out of TV, but don't worry, the IRS will agree with you on that one. So the government's focused on all of that. They're not really focused on lowering oil prices. You notice that? They just kind of are like, hey, what did the Pete Buttigieg say the other day? It's not like we have a magic dial to turn the price up and down on oil. That's their way of saying we give up. We're not going to do anything about it. And so Target's got to deal with that. Now, Target will deal with it. It's one of the best run retailers out there on the planet. So the fact that it's trading this low, I think you have to see it as a discount, and you have to assume that because of how much it rallied today, people do assume that that's trading at a discount. So it doesn't even need my attention. You've got Dave & Buster's, man. Who doesn't love Dave & Buster's? Anyways, Dave & Buster's is recovering from 2019. You can imagine the trouble they went through, right? Sales are up 10% versus 2019. I went back and looked instead of 2020 or 2021. Monthly sales over the last quarter are up double digits every single month. So people are coming back. I did a little further research so I could tell you about the cards. You know, you go in there and you buy your Power Play card and then you go swipe it and you play all the games, right? People are now starting to buy more expensive Power Play cards versus what they were buying before. That means they're spending more money, which translates to more sales. And of course, we can see that there. They did offer less discounts overall, and that was helpful for people to go in and spend actually more money there. And now they want to go after the sports gambler. They want you to come play some games, and they're redefining, I don't know if you read about this, but so in their bar area there, they're actually spending a lot of time and money on how the sound directs to you. Right? Because if you're a sports gambler, you can see, but you probably want to hear a little bit as well. They want the sports player, the sports bettor to come sit down, have a drink, play a little of the games that are out there, and then stay for the game that's on TV. I don't know if it's going to work, but they're really thinking about this from an analytical point of view instead of saying, add more TVs. No, they're trying to make sure the sound is directed to you as well. Pretty cool. Anyways, I got off track again. You know what? You see what I'm doing? You see what I'm doing out there? Kohl's, you probably saw this in the news today. The franchise group is looking to start their takeover of them. If you don't know, the franchise group is most popular is the Vitamin Shop. I always say the Vitamin Shoppy. They own them. You can franchise them. Sylvan Learning Centers. We have a lot of those down here. You can franchise those. They own Badcock Furniture, Buddy's Home Furnishing. That's a franchise. You could do that as well. A popular one down here is American Freight. I forget what it's called. American Furniture and Freight or something like that. Discount furniture and all that. You can franchise those. So anyways, they're not going to franchise Kohl's, but they're looking to acquire them. And so that was in the news there. Lastly, I'll hit you with Smuckers. Everybody loves Smuckers there. They lowered guidance going forward, but other than that, they killed it. People are buying their Smuckers, and they're able to keep charging the higher prices for them. There's not much else to say because their brands are pretty simple and straightforward. Anyways, I'll take your questions. If you have any questions tomorrow, you've got Ollie's Bargain Outlets, which we got for a killer deal in our portfolio. Our small cap fund. You got Five Below as retailer reporting tomorrow, and Campbell's Soup. You also have, of course, we talked about the S&P changes that are taking place here, and you've got, you've got a handful of Fed members speaking again. No, actually, one. Healthcare conference, not much going on. So I'll take your questions if you have any. Let me get all set up here so I can do that and see if I can help. Student loan forgiveness is stupid if they don't fix the underlying problem. Well, I would agree with that too. Yeah. I mean, let's start with that, right? Let's not throw money at things there. I get a little fired up about that because I don't think that's right. And you can disagree with me. We can still be friends, but come on. I don't think it's right. And the IRS doesn't think it's right either because they are not budging on their guidance, which says if your student loan is forgiven, that is a taxable event. So is the government going to pay for that too? Because remember, the government can't tell the IRS, don't charge them tax on that. The IRS has to come. I mean, they could be lobbied, but at the moment, that's a taxable event. People are going to be all excited. Got my student loan paid off. Wait a minute. I got to pay tax on that? That's crazy. That is crazy. Or aren't the oil companies overpriced? Overpriced, yes, not overvalued. I was looking at that last night. Oil companies are still fundamentally cheaper than they almost ever have been, right? They're in like the 60th percentile in total valuation. So if we were to say from 0 up to 100, and you were to say how highly valued are they relative to themselves over history, we're at 60%, just over halfway. There's a lot of room to go there, which is probably what is causing people to read these articles and go, wow, it's overpriced but undervalued. I'll pay up for it then. That's a tough one. Yeah, it's a tough one. Oil prices, I think you've got oil sitting at 119, almost 120 after hours. Everyone that is getting any attention is saying new highs. New highs on oil prices would be 130, somewhere in there. So basically buckle up. Summertime season, it's a great reason to have oil prices hit new highs and just be like, well, you guys are driving more, people are flying around. So it's a tough one there. Do you expect an inverted head and shoulders for a stock market recovery? I don't know. Technical patterns that people like to look at, though, yeah, I would agree. You had $1.94 2 years ago. Yeah. Well, hey, sadly, whoever the president is, got to take the heat for it. You know what I mean? What's the answer? What are you going to do? I think they were focused on gun control today. Not that that's not important, but do we need to have Matthew McConaughey on TV for 30 minutes in the White House when maybe that could be something we could talk about and do two things at the same time? Yeah, Hey, Dustin, are forgiven business loans also taxable events? It depends on how the structure of your business. S Corp versus C Corp is a big difference there. And it depends on the forgiveness of the business loan. Did it benefit you as the shareholder? Did you drive a higher profit from that? Or were you just falling out of, you were going out of business anyways? So too general of a question to answer honestly. And there's also ways around it if you're a business, I'll tell you. That's something you want to look at. Good point on overpriced versus overvalued. There is a disconnect there. Is that my fishing shirt? It is yeah. Thank you for noticing, actually. You never know. You notice how our daily, the black shirts, those are fishing shirts as well, because you never know when someone's going to ask you to go fishing. You got to be ready. Yeah. But when was the last time you went fishing? That's true. I know. I don't even know. 2016? Maybe. That's an honest answer. Oh, man. Outlook on REITs for the next 2 quarters. Almost all analysts at the moment are bullish on REITs as a whole. But remember, REITs, it's almost like communication services. They should break it down. They broke down communication services from the telecom. Remember, telecom used to be the sector, and then they said it's now going to be communication services, which includes a little tech. They should do the same with REITs, and I don't know how they would, but REITs there's either traditional REITs, there are commodity REITs, there are storage and database REITs, and then there are tech REITs. So you have to really dissect that sector, in my opinion. I forget what the question was. I'm sorry. But can you bring this to any president when the gas skyrocket? Can you bring it? Well, I mean anything. I mean, whoever, think about it at a company. What's Elon Musk, right? If something's going wrong, that's the guy that's taking the heat, and he's got to answer to it. It's the same thing in our country. If you're the president or the governor of your state and something is going wrong, that person's taking the heat, whether they can try to do anything about it or not, just jawboning, as they like to say. It's up to them, but sadly, that's the person taking the heat. It is the way it works. It's supposed to be anyways. Oh yeah, you got that going on too. There's not going to be a lot of rocking the boat until the midterms, and that's built in by design, so that's understandable too. I don't like it, but it's understandable. Cody don't strike you as a fishing type? He's more of a fisherman type than I am, right? You've probably been fishing more than me? Maybe. It's just that time of year. It's hot down here. Florida goes inside this time of year. We let all the tourists go to Disney World, and we just hunker down inside. Yeah. All you need to be a good fisherman is patience and the ability to drink beer. Hey, a good cigar in there too. You got your buddy with you. Maybe a T-top at least. Air conditioning would be nice. Yeah, Disney. There, he said it. Anyways, okay, so a little bit of rambling today, but again, trying to focus on different topics that could be hit or miss. I don't know, but I'll try them out. I will look at your comments and see if those are the types of things we should continue with, because they do take quite a bit of time for us to put together, and then I just blow through them in like 3 minutes. But I hope you enjoyed. Right? Trying to teach you something. Advisors that like to teach. I think they should all teach out there. And of course, we will keep doing that. So we'll be back tomorrow. Do this all over again. Hope you enjoy your day, rest of your evening and everything, and adios.